Joe, today is a workshop day. I'm very excited about it. We actually have quite a lot to cover. First, Plan A is available in the Discord. We're going to go through it every single bit, step by step. Second, position sizing. Thanks to Deep Thought, we have built a new position sizing spreadsheet based on ATR and/or the 10 EMA distance. And third, portfolio tracker. This was a big thing for me. This was a really big thing for me because I knew I was up bigly this year. Like I could tell you I was up bigly this year. And then I had some drawdowns. But in my account, I still had positive values. And I'm like, and my portfolio tracker showed I had a negative 8% return. And I'm like, there is no possible way that I'm up dollars and down percents. Like the math don't math on that.
Yeah.
So thanks to ChatGPT, I learned that whenever I had created it, was using there's two different ways you could do this. Time weighting, which is what it was. So time weighting returns or money weighting returns. And clearly the time weighting returns, it broke because I took withdrawals out of my account this year. If you don't take any withdrawals out, they're the same. But when you take withdrawals out, it changes things. So
Sure.
I was like, okay, that's on me. I didn't realize that was going to break stuff. So a lot's happening right now. So we are going to we're gonna hit it hard today. So if you guys don't mind, it is going to be a intense. This is everything that we're going on. Sean is ready. Plan Alpha. Let's do this thing. And who else? By the way, I'm just first off, I gotta say, I'm so stoked that everybody's here. Right, this is the invitation only live stream. Yet we have so many people here. Like it's almost like we didn't lose anybody. Right, all the freeloaders are gone, and all that's left are the outliers who are ready for the Masters of the Universe money. Like King Arthur saying, "The future has no bounds." I love it. I love it. And you know what, Art Senior Wahoo, you don't have to wait for Friday. We're going to reveal the whole thing right now, step by step, all the way top to bottom. Is that all right? If that's all right with you, type all right in the chat. So there you go, little fellow Texan Matthew McConaughey. All right in the chat. Outliers assemble. Let's go. All right, so let's start with Plan A. Plan A actually is significantly less complicated than anything we had before. And if you look at the exits, Joe, I had literally 3 slides of exits before. Now it's 1, 2, 3, 4, 5 possible things. Like this is so much simpler, and I'm so excited about that.
Yeah, that I was looking at that earlier. I'm like, wow, we only have 5 exits. That's fantastic. Way
Yeah,
simpler.
a lot easier. Okay, so in fact, let's start there. Let's start on the exits because it is smaller. So we'll start over there. First, the outlier sell signal. Obviously, the outlier sell signal. But I got to tell you, Scott and I had a really hard time finding ways to beat the outlier sell signal on its own.
Wow.
And I was like, yeah, I was really surprised. I threw everything at it. Or I should say, I asked Scott to throw everything at it. Literally every single thing that I've ever used in the past, the outlier sell signal basically just trounced it. And so that was amazing. I was super excited about that.
I think we got to give a shout out to Mahesh and Mark on that one then. Great job.
Mahesh and Mark absolutely killed it. But one thing that, I want to be sure of as a trader, you want to be sure of, and even Mark said you don't want to jump out of an airplane without a parachute, is figuring out where the stop loss is going to be, right? And listen, some of these outlier signals can last for months, right? And they can go down for a while and then finally hit the bottom and then start coming back up. And you could definitely take it later on as a second chance signal. But I want to make sure I contain my risk. So one thing that we are adding in is a close under the 10 EMA. That is our only chart stop. That is it. No half ATRs, no close under the prior day low, no nothing like that. It's simple AF, a close under the 10 EMA. I'm very excited about that.
For our new folks, Chris, let's show them what outlier signal is and what a 10 EMA is.
That's a brilliant idea. I know Joe's favorite stock is Zillow, so we'll go to Zillow. I just happen to start right there. I don't know, just start right there. Let's go for it.
Must be that other Joe.
All right, so let's zoom in here. And so what we can see here are, a buy signal and a sell signal. a buy signal, and a sell signal. Right now, the sell signals are there to make sure that you get out of the way if things aren't working, but also to keep you in when a big, beautiful trend comes, right? In fact, the performance summary on here, if you ever want to see how these outlier signals perform, go up to this button right here, performance summary. It'll show you the outlier signals versus buy and hold. Now, at first, you're like, well, it's less than buy and hold. It's not that great. Hold tight just a cotton picking minute here. This has outlier having you in on Zillow in particular for 381 days out of 1,332 market days. Yet your returns are roughly the same. So you're in for about a third of the time. Your returns are roughly the same. So your capital efficiency, meaning on a daily basis, how much are you earning that you're in the market exposed to any market risk versus buy and hold, is 3.16. Like, this is cool. This is really, really cool. This is the important part of outlier, right? This may not seem like that big a deal, but when you realize you're getting 3 times the capital efficiency, it's a tremendous deal. A tremendous deal.
And that doesn't consider the fact that I'm gonna use that money and invest in other stocks instead of sitting here waiting in buy and hold mode.
Exactly. Exactly. So this one got a buy signal today. That's why it was on the bull list today. So we would be looking to get out with either an outlier sell signal or a close under the 10 EMA. So let's just go to the Zillow chart real quick. Now you'll notice right here, and actually I'm glad we pulled up Zillow because this is going to be an entry filter that we wouldn't take it. I'm glad it's like this. But the 10 EMA, I have a light bulb that's flickering. I think it may go out. If it goes out, things are going to look weird, is what it is. I'm just putting that out there ahead of time. Okay, I'm going to have to change that after this. So the 10 EMA is what I've always used, always as a trailing stop. Now, what is a trailing stop? A trailing stop moves with you as prices are going up. Now, there are times like right here where you can get out and then get right back in. A close under the 10 EMA, I love to call a red light. Something's not acting right. If you're getting closes under the 10 EMAs, something ain't right. And that is the indicator of your short-term trend. Now you can see right here, couple closes under the 10 EMA. Price did not change basically from July until July 22nd to August 13th. So basically a month of going sideways. And you had a little bit of a warning that it's not as strong as it was. Came back up, right? A lot of choppiness going on in Zillow right here. Now that can be very, very frustrating. So that's why, we look at more than just one thing in a nutshell. But the 10 EMA is a trailing stop that'll trail along with you and get you out before anything happens. Get you out of the way before, and here's a downtrend, right? It'll get you out of the way before a big downtrend happens. Now, of course, there are times where it gaps down earnings. We'll talk about earnings in a moment. There are times where it gaps down and you can't control that, right? We can't control a gap like this, but you can see a close under the 10 was the beginning of a big, ugly, nasty downtrend. All right. So the 10 EMA will be our trailing stop. The 10 EMA is the red light. Exactly. Now, speaking of earnings, this is a perfect example as to why you can have everything in the world going for your stock and then earnings happen and you get absolutely monkey hammered. So earnings actually are one of the exits. Now, can you hold through earnings? Of course. But risk gets exceptionally elevated there. There are times where you've seen stocks, just explode higher. There are times when you've seen stocks get absolutely destroyed. I don't want that risk. That is a huge amount of risk that you don't have to do. It's like walking in the casino and saying, I'm putting it all on red or I'm putting it all on black. Let's see how it goes. I don't want that. I just want to follow along with the trend. So earnings will be and always will be an exit signal for me. Now, closing inside an order block, or at least touching an order block at 120 days. This is something Scott was really excited to show me. And AMD was his example. And I'm glad he did, because as you can see, as AMD is going up here, it made lots of little order blocks along the way. And it even blew through some older order blocks right here. So what we found through the data was that if an order block is less than 120 days old, you can trade through it. Now, that's because the trapped buyers there are not that desperate to get out yet. They're hopeful. right? They think that everything's going to be fine, right? They're going to continue to hold, and we can hold along with them. Right? You can see these short order blocks and how they lasted and how they were broken very quickly. However, if you find an order block that's greater than 120 days, like this one here was from July of 2024, that is a huge red flag to you. This is trapped buyers who are so pissed, angry, irritated that they are finally seeing their accounts in the green. They're like, I gotta get the hell out of here as fast as I possibly can. And look at that rejection. Tell me order blocks don't work. But they
Absolutely.
work best when they're over 120 days. So I think that's really, really cool. Now we have the data to support this. Oh my gosh, Joe. We have the data to support all of this, which is great.
Now, do
Oh,
you know if Mahesh has the 120-day factor into the Outlier 9 visual inside the software or not?
no. That's just using any order block. So
Okay.
that's a good question. That's a good question. Now Corey says, I love the fact that you're basing all this off of unbiased data and not opinions. Yeah, of course. Thanks, Corey. Why opinions don't matter in the market for sure. Now let's talk about gap and craps. Gap and craps are when a stock gaps up. Here's an example of a gap and go. When a stock gaps up at least 5%. So I didn't know where to quantify that, but Scott actually ran all the data. And it's it's a stock that has gapped up at least 5%. If it closes underneath that gap candle, like here, if it closes underneath that gap candle, it is a get out signal. But as you can see right here, it did not close underneath the gap candle. It did not close underneath the 10 EMA. And what happened after that? It continued on in its trend.
Gap and
How
go.
cool is that? What was that, Joe? Sorry.
Gap and go.
Gap and go. Gap and go. Scott right there. Scott, the man of the hour. Only data pays. Only data pays. Exactly. And the over 120 days are indeed significantly more powerful. Zach says Microsoft did this recently. Let's take a look at Microsoft. Oh, there you go. Good example. Let me remove the drawings on here. There you go. Perfect example. Thank you, Zach. Everybody type Zach in the chat. Zach, excellent example. Zach. Very, very cool. So this would be a gap and crap. It gapped up from here, the close. And let's say that we took it from the top, right? 8.27%. And then what happened? The very next day, it closed underneath the gap candle. That was your red light. That is a get out of the way card. Get out of the way signal here. What happened? It's sold off ever since that point.
It's almost like it works.
What was that?
It's almost like it works.
It's almost like I know what I'm talking about. Yeah, exactly. Gap and go versus gap and crap. We just saw two perfect examples of what those look like. So that would be that. That's it. That's it for exit signals. It is so much simpler. And I got to tell you, I'm so stoked that Scott helped me narrow all this down. Now, on the entry side, not as simple, but of course, break it down. Break it down. If the market's not set up, don't do anything else. If the markets and sectors aren't set up, don't do anything else. Finally, if the market sector and stocks are set up, now we can get busy. So think of this like a waterfall. If this is not there, don't even move on to the next one, right? Now, I may rearrange these orders. Just putting that out there. I may rearrange the orders of these as I build out the whole PowerPoint here, but this is what is included in Plan A. First, a buy signal on the market. Joe, you wouldn't believe it. A buy signal on the market, like I feel like it doubles your expectancy. It's not that hard. It's like, hey, is the market going to go up? Oh yeah. Okay. I'm good for it. I'm good for it.
Mhm.
Sean says, I love when math works. Me too, dude. So let's go take a look at what this looks like. So the market, the SPY, has a buy signal. Easy. There you go. Market signal right there.
Now, there's a couple of places where we can find that buy signal, right? We've got it on the chart, but we also have it in the center of the screen.
True. Right. There's one right here. You could look for that current signal date. You could go to the watch list and save it as one of your favorites, which I did. So you can see it right there. I mean, for sure. So first, a SPY buy signal. Easy peasy. market trend. Hold on. I wonder how many of these 9 we're going to end up with. Very curious how many of the 9 we're going to end up with. So the market trend, the 10 over the 20, price over 50. Now, last week we were throwing around numbers 145, 137s, and I was running through the data, and Scott was sending me like the export, and so I'm going through and I'm visually looking at all these traits, and I found this giant clump of losers, and I was like, wait a minute, what happened here? And it was when the market was trending obviously down. It was obviously in the bear market that happened earlier this year, and I'm like, I would never trade that anyway. Scrap anything that doesn't have the market trend with it. So we've got the market with a buy signal and the market trend. Now, the trend should be easy. If you know what the trend is, tell me in the chat, and I'm gonna quiz Joe. Joe, a graduate of OVTLYR University, should know this.
I'm gonna phone a friend, Mikey. No.
What's the trend?
The 10 EMA needs to be over the 20, but the price needs to be over the 50 EMA.
There you go. Very good. Very good. Dr. J nailed it on the pop quiz. Exactly. 10 over 20, price over 50. Outstanding, outstanding, outstanding. Very good, very good, very good. You guys have heard this before. I know you have. There's Mikey Mike right there. He came through. He came through clutch.
Oh yeah, Mike.
Okay. So we've got the market trend and we've got a buy signal. That's not any different than what we've had in the past. Now, full stocks breadth over the 10 EMA. Joe, I feel like we've been doing that in the past. And now we have mathematically proven you need to have these. You must have these. It is not up for debate. If the market breadth is not there, don't trade it. Don't trade it. So let's pull up market breadth here. Now, for clarity's sake, it is the full stocks, bull list percent over the 10 EMA. What does that mean? I know it's a big mouthy words. You're looking for full stocks over here, or you could select it from here. 2 places you could select it. What you're looking for is the green line. This is the bull list percent. This is the number of stocks with buy signals. Is what it is. That's always what it's been. In fact, Joe, I don't know if you know this. I created this indicator. I can only take credit for this inside of the OVTLYR platform, and I'm very proud of it. I'm very proud of it.
Well done. We all appreciate it because we're about to make Masters of the Universe money with this.
That's what I'm talking about. So this is the number of stocks on the bull list. As you can see, there are times when it's growing and times when it's falling. Okay. Now, to help see when those crossovers happen, you can add in moving averages. So we add in the 10 exponential. And would you believe the one that we've always been using was mathematically the best one? It's almost like I know what I'm talking about, Joe.
Well, 20 years of experience will do that to a guy.
Who would have thought? Who would have thought? Okay, so if market breadth right here is crossed down, don't trade. Don't be trading. All right, so next, the SPY heat. This is new. This right here is new. The SPY's heat map needs to be below 70. Now, if you've been trading for the last couple months and been struggling, this could have been why. There you go. The market got really overheated. The market got very greedy, and it has since been getting less and less and less greedy all the way down. And once it goes over 70, we found that the signal efficiency tanks. Overall signals tank. But don't be dismayed. While this did happen and stay there for a while, it's not common to sit there for months. Right? Look over the last year. Right? There was probably let's see. The first time I did it was November 15th, and it started to come back down by December 17th. So it had about a month that it was above 70. And it didn't get above 70 here. No. It got above 70 here from about May 9th to June 5th. So roughly about a month right there. So this prolonged, nearly 3-month duration being as greedy as it was, that's not normal. That's not normal. So what I'm saying here is that there are going to be a lot of times. There are going to be a lot of times where you do nothing. And then you sit in cash and you don't F up your portfolio. And Joe, I really can't stress that enough. right? In fact, I put this in the memes earlier. Here. I saw this on my YouTube feed and I said, this is a perfect example of sit and cash and don't F up. It's never been, I've never made a trading plan as profitable as this. It has never been easier to be successful. It's also never been easier to be distracted. Doing something when there's nothing to do is being distracted. So I thought this was a perfect example of sitting in cash and not effing up.
So you're saying you're
Oh,
not necessarily profitable just because you're busy.
right.
Mm-hmm.
And you can watch your profits evaporate by being busy.
Oh yeah.
That's the not effing up your portfolio part.
Now we can see that the SPY is under 70, right? So does that mean I'm going to go out and I'm going to buy a bunch of stuff tomorrow?
Oh, that's a great question. But before we get there, I have to go full screen and I have to hold this up and I have to say thank you, Kostya, who designed this, and I 3D printed it. Everybody say Kostya in the chat. Nice sign. Yes, sit in cash and don't F up precisely. And when it is time to not sit in cash, we'll set it aside. We'll set it aside. So Kostya, thank you. I appreciate that. But to your point, Joe, when the SPY heat map. Now remember, it's this one right here. This one right here. Now, really good question. Someone's probably thinking, why use this one over this one? This is the heat map of the index. This is the heat map of everything inside of the index on average. Okay, so what this means is of the 500-ish stocks that are in the S&P 500, this is their average fear and greed score. This is the average fear and greed score, or the fear and greed score of just this asset. That makes sense?
It does. Thanks for that explanation. I've wondered that in the past.
They're going to be similar. I mean, you can see the similarities here, and makes total sense that they would be, but they do move a little bit differently. But the next part of this is when it's below 70, it must be rising. It can go below 70, like it is today, 69.83, but it must be rising. So even though you see it falling and it's under 70, that is not a time to get in. It needs to be under 70 and rising. Up on this side, where you can see easy gains right there, making trading effortless, versus on this side, when it's been sideways and choppy and frustrating, coming down under 70. So that is everything as far as market wise. So next we'd move into the sectors. So the sectors start with the bull list percent over the 10 EMA. There's nothing different about what we've been talking about. Oh, thank you, Scott. The expectancy, if you are just hell bent on buying stuff as the expectancy is falling, just plan on losing money, right? The outlier is telling you that it's getting less greedy. And if you are deciding to put your money at risk here, it's making things a lot harder. New little thing down there. Joe asked me to put that together because people are asking what expectancy is. Thank you, Joe.
You're welcome.
Next, bullish percent over the 10 EMA. I feel like we have that. Haven't we been talking about that in Outlier 9? So we're up to 1, 2, 3 of the Outlier 9. Now we're up to 4 on the Outlier 9. Find sectors that have bullish breadth. You come over here. We have it done for you. It's done for you, Joe. Over here on the left-hand side, you can see where it's bullish crossover. You can see where it's bearish crossover. How easy is that? How easy is that?
Awesome.
Now, when you find one, you want to see this sector constituent rising. Okay. So for example, let's go into Joe's favorite stock, Zillow. Joe, you probably have a better favorite stock. What's your actual favorite stock?
Anyone that's making me money today, but I'm in cash. I'm in cash.
All right, we'll stick with Zillow then. Zillow.
It's not KTOS, I can tell you that.
It's not KTOS. No way.
Yeah.
All right, so coming into any stock, you can see the sector constituent. Now, remember we talked about what that was earlier. This is all the parts inside of the sector. This is the fear and greed of the stock itself. This is the fear and greed on average of everybody in the sector. And that is rising. That is a requirement. It must have the sector constituent heat map rising. But This also has to be below 70. SPY has to be below 70, and your sector constituent has to be below 70. This is at 66.37 and rising. 66 and rising. That's what you'd want to see. That's what you want to see. That's beautiful. Next, AS1 and AS2. I renamed these recently. I switched the names because I want to make this simpler. But AS1 is when the market has a donkey channel score of 1 and the sector, or 1 or greater, and the sector has a donkey channel score of 1 or greater. Easy to remember, right? 1 means you need at least 1 on the market and 1 on your sector. Now, Joe, that sounds really awful confusing. How about we make it easy on you? We have the score right here, right? So for example, if you wanted an AS1, you'd need to have the full stocks have at least a 1. It has a 0 today. So that would not count as AS1. And then you'd need to find a sector with at least a score of 1, like discretionary or technology or communications. You need to find one with at least that score. So we're trying to make it easy on you here. Mm-hmm. Now, AS2 is when the market is equal to 2 and there's anything on the sector. It can be literally -2 on the sector. Doesn't matter. If the market has a score of 2, then that's what we're looking for. And we don't have that today. But you could take energy at -1 as long as the full stocks is showing a 2. Now, what are we measuring here? We're measuring this. Now, we've always had this, but we changed it recently because one of the things that we'd noticed was, in fact, Mahesh, our CEO, was telling me how this was one of his most valuable pieces of data that he looks at. And so one thing that we found, we had some losing streaks, and honestly, praise Jesus for losing streaks, because then that prompts you to look for new things. We found a lot of things because of those losing streaks. When we're getting more and more uptrends, less and less downtrends, that's how you get the scores. So the purple lines show you how that's moving. The green is when it actually happens, and the red is when it actually happens. It is so awesome. I agree. Now, there are times where it's gray like this, and that means that you don't want to be trading anything. Okay. There are less uptrends, more downtrends. You've got a negative score. You don't want to be there. And this is the same in the stock, in the market, so full stocks, or if I jump like into financials, it's the same for the financial sector. Okay. So that's how you come up with these scores to get AS1 and AS2. AS1, remember, is market of at least 1, sector of at least 1. AS2 is market equals 2, anything on the sector. Anything goes on the sector. Now you're probably asking yourself, well, if it only happens on that date, then it's going to be so hard to do. You can actually trade these at least 1 day later. If everything you see on the screen lights up today, but the buy signal came yesterday, you can still trade it. A second chance signal. So we have more opportunities to trade. All right, next, RG, relative greed. I made this. I'm very proud of this. If Scott's still listening, he can share some details, but relative greed could possibly be the strongest signal in this whole change. Relative greed was unbelievably strong compared to when it wasn't there. So what is relative greed? So let's go take a look at Zillow again. And we can see that the real estate sector has a greed score of 66. Okay. And if we go to SPY, let's go to SPY over here. Scott says he agrees. If we go to the SPY, we can see here that the SPY's fear and greed is at 69. So the SPY has a higher greed value than the real estate sector. Even though the real estate sector is rising and the SPY is falling, right now, what we see is relative greed is less than the market. So think about what this really means, is that you want to be in a sector that is greedy AF, the most greedy sector in the entire market, greedier than everything else out there. That is what we're trying to find. That is what the relative greed score is telling you. When your sector fear and greed is higher than the market fear and greed, that's where you want to be. And if not, you don't have to be there. Johnny says it's agreed. I like that. And that's when the sector constituent is greater than the SPY heat map. All right, so let's say that you found a stock. The market is set up here. We've got the trend signal and breadth. We've got the fear and greed that we just talked about. We've got the breadth that we've talked about. Joe, bro, we're 5 of 5 on Outlier 9 going through this so far. I wonder if we're going to get all 9. I'm just curious. I don't know if we will. Well, let's just keep going here. Next, hang on. There we go. Next, you want to see an outlier buy signal on your stock. Simple enough, right? If we go to Zillow, we got that buy signal here, which happens to be another one of the 9. Easy enough. And it can be yesterday's signal or today's signal. So that makes life easier, right? You don't have to get everything done in one day. You can do one day or one day later. And it must be above the 10 EMA. Joe, why does it need to be above the 10 EMA?
Well, we have a 10 EMA exit, but also we're trying to follow a trend. And if we're below the 10 EMA, that means the near-term trend is going the wrong direction.
Well said. You can't enter a stock if it's below your exit signal.
Mm-hmm.
You can't do that. So,
you can. You just wouldn't be following a logical plan.
Yeah, exactly. Let's go back to Zillow here. This is above its 10 EMA, so it's good. And you know what, Joe? The stock trend has to be in place too. The same trend template that we've talked about forever and ever and ever, which gets us to another part of Outlier 9. So we're up to 5, 6, 7 of the 9. This is crazy. Joe is a rock star. I agree.
Oh, thanks,
and the stock heat map has to be rising. Joe, this is well deserved. You make this content even more fun, so I appreciate you.
Well, thank you.
The stock's heat map has to be rising? Oh yeah, you want the stock getting more greedy. What the frick? Is that not this?
Yes, it is.
Is that not what we've said for ages? Basically, we proved the Outlier 9 is there for a reason.
Mm-hmm.
So we want the stock's heat map to be rising. And then it must be above the previous day's low at entry. After you're in the trade, it can go below the prior day's low. But if you're looking for entries, like this example right here, which is why I was glad I saw it earlier, I would exclude this one today. Tomorrow, that's another day. Tomorrow, if it's back up, everything else is lit up, I can still take the trade. So I think that's pretty cool, right? Second chance signals really do exist here. And then the price cannot be inside any order block and must be at least 2% away. Now, Joe, when I made my 2% rule, I pulled that thing right out of my backside, live in a trading room. Somebody was like, how far away do you want it? And I'm like, I don't know, 2%. Scott proved it with math.
That's awesome.
It's crazy.
It's so crazy. Data backs up suspicion.
Well, it's like if you and granted, I don't do sports, but it's like if you ask Tom Brady how to throw a really far football, he'd tell you, well, I don't know, I just grab it and I grip it and rip it, right?
Mm-hmm.
But then they would like measure his pinky and they'd measure the way he cocked his wrist and they do all this stuff and they'd be like, wow, he exactly nailed how to throw a football. It's kind of like that, right? Mm-hmm. We've seen how all this works. We've proven all this works. And now we have the math to show that we didn't make it out of our backside. We actually figured it out, which is really cool. Really cool. So there is a question. It is the 120 days, 120 day order blocks. Anything, if it's less than 120 days, just ignore these. Just ignore these. In fact, let's do this. Thank you for that clarification. I really appreciate you having done that. More than 120 days. Let me save that. So, if I'm not mistaken, we need to see the trend of the market. We need to see the signal on the market. We need to see bullish breadth. We need to see the sector fear and greed growing. We need to see the sector breadth growing. We need to see the stock trend in place. the stock signal in place, the fear and greed in place, and no outliers in our or outlier blocks in our way. Bro, it's almost like I was saying earlier with the Tom Brady thing. It's almost like we knew what we were doing before we could prove that we knew what we were doing.
And I can see the results in one screen in about 4 seconds, and I can know if I should be considering trading this stock or not.
Yes, exactly. Now, what's great about this is you can build a screener for a lot of the stuff that we've talked about. But one of the next updates, Mahesh is actively asking for what you would want to see in the updates. And I'm going to shoot him over plan A. And I'm going to say, help me build the screener. So it's this. Now, Joe, I just noticed something on here. There are some things that I have to take out of my plan that I didn't talk about. One is the snob filter.
Yep.
One is the snob filter. What is the snob filter? You tell me,
Snob
what is my snob filter?
The snob filter is keeping you out of a lot of winning trades because the rest of the retailers are in them.
That's very true. My snob filter was I didn't want to trade anything less than 20 bucks. But the data actually showed the less expensive it was, up to about $5, or I should say down to about $5, the better the expectancy got.
Go figure.
Come on now. Unbelievable. Unbelievable. Thomas says he's going to be watching, can't afford to be snobby these days. Yeah. Thomas says he's going to be watching this over and over. Don't worry, Thomas. In fact, since you are an outlier, you got the invitation to be here. This is going to be part of the daily trading plan that we go through every day. So don't worry about it. Also, there was another exit rule that, another entry rule is starting with the highest backtest and working our way down. So let's talk about that, right? So if all of these are September 9th, some of these are 3.48%, some of these are 200, 49, 500, 77, 400. You could take up to the top 10 in that day. The top 3 have shown to give you the best results, but you could take up to the top 10 on that date. Now, there will be days, listen, there will be days where you've got 20, 50, 107 that you could pick from. Don't. Start with the highest backtest and work your way down. Once you get to 10, your portfolio should be you should be really maxed into the market at that point. But there will be days when there's 6. You can take up to 6 as long as they are positive and you're working yourself on your way down. Because, Joe, let's be realistic here. Not all of these are going to have liquid options. Just not going to happen. Mm-hmm. And you're not going to have enough capital to get all of them every time. So that's why I'm giving you a little bit of room. Up to the top 10, anything past number 10 in ranking on that date, just delete it. Don't worry about it. Look for tomorrow. Right. So I gotta tell you, I know this feels really daunting on the entry signals. But this is not too dissimilar from what we've always had on OVTLYR 9 with some rule changes. And in fact, I'll be very honest with you, there's a lot of simplification that happened to make these results even better. So Scott and I are still working on plan B, but plan A, this is it. This is it. You could take a screenshot of this if you wanted, but don't worry about it. We're going to go through this on a daily basis, so you're never going to be left out in the cold. Now, there's a couple other things that we need to discuss, right? A successful trader can't just buy anything or everything all the time. He needs to know how much he needs to buy of it. So, as we discussed, the exit signal, a close under the 10 EMA, is incredibly important. Meaning there will be times where you have a significant distance to your 10 EMA. Like here, this is about $1.61. Then there are times where you're right at that 10 EMA. Let's see. Like we'll just use that candle right there. Choose this candle. Right. 28 cents. So one of these is, 5 times farther away at least. And some people would base their sizing on how far away that is. Now, if you were taking this trade and you're basing your sizing on how close it is to your exit point, you could take a lot bigger size than you would here. We don't want to do that. We want to keep our risk in check, our risk the same. So, thanks to Deep Thought, the man himself, helped me build a position sizing spreadsheet. Now, I know this looks like overwhelming, so let's back it down a little bit. Let's back it down a little bit. We'll put Joe's favorite stock in here, Zillow. Hang on, delete. There we go. We'll put Joe's favorite stock, Zillow, in here. All you got to do is type in the letter. Anything that's yellow are user inputs. Anything that's gray are formulas. Don't mess with formulas, okay? Just stick with the yellows. And let's go look at the Zillow options chain real quick. My login token has expired. Joe, how could you let this happen to me? How could you?
It only happens. It only happens when you're live.
Of course. It worked great all day until right now. Yeah, I get it.
Yeah.
Zillow is Joe's favorite stock. It is. Write it in stone. Joe's favorite stock. He's not a SoFi bro. He's a Zillow bro.
It's funny because I don't ever recall trading it, but maybe I did. Who knows? I don't necessarily have to care about it as long as it's going up.
That's right. You know what I could care about is monkey hammer koozies like this one. There you go.
Nice.
They even fit 20-ounce Diet Dr. Pepper bottles. I don't know if you know this.
All right.
All right. So let's say we go to Zillow and we find an option, which the option liquidity, that's not changing. That will always be the same. That is written in stone. Put it on my tombstone. Let's say that we go to, oh man, Joe, your stock doesn't have much liquidity.
Oh.
For demonstration purposes, I'll go with this. Otherwise, I would never go that close. But let's say that I want to go with like the, oh my gosh, Joe, your stock sucks. Like, look at the spread on these. I want to see 50-cent bid-ask spread. And this is $4. Your stock sucks so hard, Joe. We're gonna have to go to a different stock, a real stock like AMD.
I actually looked it up, and it was Mikey who suggested this stock.
Yeah, I'm sure. I'm sure. All right, so AMD has tons and tons and tons of liquidity. Let's go over here. Not so much here, but we could go to like October 17, all the liquidity you could ever want. And let's say we go to the 78 delta. That's close to the 50 delta. And let's say that we're going to pick up one of these contracts here. Super expensive, but is what it is. This is just for demonstration purposes. So we would go back to our position sizer and let's put in a real stock, a manly stock like AMD. And let's say I always use the 80 delta, but if you wanted to get really pedantic, you could say 78. 78 delta right there. But for me, I'm just going to put 80 on everything. That's just what it's going to be. And this will give you, oh, AMD is a terrible stock to pick, actually, because it's in a downtrend. Thanks to Deep Thought, by the way, for being such a brilliant coder. This is exactly why he did it. It doesn't even tell you how many to buy because it's in a downtrend. He says, don't even think about it, bruh. Don't even do it. Bro, that was such a brilliant move. I nearly fell for it. By the way, he has all these notes on how to do it. So be sure when you get this that you take a look at the notes. And you're probably asking, where do you get this? That's no problem. Go over to the FAQ and member contributions over here on the left. Here, FAQ and member contributions. Go to the VIP toolkit and you'll see it right here. Thanks to Deep Thought for putting that together. So let's pick a different stock that's actually trending higher. Let's go to
we got a suggestion for Datadog, DDOG.
We can do Datadog. I made good money on Datadog earlier this year.
Yeah, I know I traded that one.
All right, Datadog right there. That'll work. So Datadog. And look at this is so much faster, by the way. So good job on that, Deep Thought. So we've got our current price, we have the 10 EMA, and we have the ATR value. Now, it may be slightly different from what you see in your platform to what's on here. There is some rounding involved. There is some timing involved, but it's going to be in the ballpark. All right. Let's not overthink if this is, $5.03 versus $5.10. It's there. It's fine. So that'll give you a share size. Now, how do we calculate share size? So this is the formula I have always used that I learned from Larry Height. He specifically gave me this formula, but with a modification. It's taking the max risk between 2 times the ATR or the distance in the current price to the 10 EMA. So what that's trying to tell you is we're taking a minimum amount of distance. So if the half ATR is really close, or I should say, if the 10 EMA is really close, we're giving it at least half of an ATR's distance in our position sizing. Okay, and that's because if you only use the 10 EMA position sizing and it's really close, you could have tremendously huge positions that you don't need. So we're having at least a minimum of floor position size and then shrinking from there. I really should say a ceiling position size and shrinking from there is what it would be. So it does all that calculation for you. It says your share size could be 497 shares or six contracts. Sorry, I didn't see the word there. Option size in contracts. So it's taking 497 divided by 80 gets you roughly 6. It rounds, of course. Now, if you were to do that, you're taking $6.70 in risk per share. So that is more than half of an ATR. Half of an ATR is about $2.50. We're taking $6.01 from the current price to the 10 EMA. So we're going to position size smaller because of that, Joe. I think this is brilliant. I'm really impressed by this.
This is brilliant. Well done, Deep Thought.
Yeah, very, very. I will not be complicit in you buying this shitty stock and option. Yes, exactly. That's exactly what he's doing by not allowing you to get the right position size. Well said. So let's say that we're going to go with this option here for $19. Right. So you come over here and you type $19. And dude, this is one of the reasons I love options. If I bought 497 shares and my account balance was 100,000 and I'm risking 5%, which we'll talk about that risk in a moment, that would be 69% of my portfolio. That's a lot. That's a lot of my portfolio to put in one single stock. But if we buy the option contract and we have an equivalency because we put the 80 delta in here, it's only 11% of my portfolio. Isn't that cool?
Basically, you're going from having 2 positions to having 10 positions, potentially.
Exactly. Options, the way that we do options, the deep in the money options, are a tremendous game changer. A tremendous game changer. So super cool. Very useful on that. Now let's talk about the risk percent over here. The risk per trade, you decide this. And this is the max risk that you're willing to take. Now, I'm sure you've heard on Turtle Traders, I think their risk limit was around 1 to 1.25. And while we are putting in 5% risk, we don't actually want to lose 5%. That is our worst case shit went sideways type of max account risk. By design, this is only taking 1.25. So it's actually 25% of your max account risk. That is by design. Joe, this allows you to take bigger positions with a tighter stop and still risk $12.50 per trade in this case. So 1.25%. But if things go wrong, if it's a big gap down, if something ugly happens, we've seen it. We have seen it. Hopefully the max risk maxes you out at $5,000. Oh, there's a couple other things I forgot on here. Hold on. I forgot. Healthcare is excluded permanently. We will never trade healthcare ever again. I forgot to add that. Now, that's my trading plan. You do you. But yeah, I will never trade healthcare again. And it actually did prove out in the data that to leave off healthcare gave you a way better expectancy. Yeah, that was healthcare. F that guy. F that guy real hard. Back to this. So we've removed healthcare. We know our position sizing, and Deep Thought won't let us buy shitty stocks because he won't let us get the right position size. So I really appreciate that. Now comes to your portfolio tracker, right? So you're putting on all these trades. How do you keep up with it? So one thing that has plagued me for a couple weeks was, well, not more than a couple weeks, was yes, I did have a drawdown. I'm okay with that. That's part of the game. But I was really frustrated because I'd look at my account and I could see my P&L was positive for the year, but yet my portfolio tracker showed an 8% decline. And I'm like, this is broken. Something's not right here. So I asked ChatGPT, I said, okay, why is this broken? What is happening here? And it says, you have the correct time weighting percentage return. But the reason you're seeing dollars in your account and a negative value in your spreadsheet here is because you need to have money weighting return. I thought I did it right when I set it up originally, Joe. Now, if you don't take any withdrawals, it won't matter. It won't change anything. But I had taken multiple withdrawals this year, which is not reflective in this. This is still percentage change. And that screwed up my time weighting. So now it's money weighted returns. And yes, thank you. I'm still doing great on the year. So I'm very excited about that. Now, I'm going to be working on this, and I'm going to build in the position sizing spreadsheet for you. So you don't have to open two spreadsheets. All you have to do is open up your position sizer. I'm sorry, your portfolio tracker, and it'll automatically, Joe, know your position size based on your account balance. It'll do all the math for you. It'll just be right there. Isn't that cool?
That's awesome. Fantastic. That's a great addition.
That should be there by the end of the week. And I will I'll have Deep Thought help me out and put it in the right place. So this is what a comprehensive trading plan looks like, Joe. We have our entries, we have our exits, we have our position sizes, and we have a way to track this in our portfolio. It is a huge, huge, huge amount of work to get to this point. We have spent weeks backtesting, proving the data, making sure it works, refining the data, and we have gotten to an expectancy so high it feels unbelievable. Some would call it, what's that word again? Oh yeah, masters of the universe type money. I don't play around, Joe. Like this is what I'm here to do. Now, I'm excited because I get to share the whole thing with you. Not just you, Joe, but everybody watching here in the invitation only live streams. Because Mahesh is funding, not Mahesh, but the company is funding a $30,000 account. It's actually this account that I've been trading or not trading in. Mahesh still hasn't sent the deposit over, but I will be trading everything top to bottom, in and out, position sizing, everything you'd ever want to know right here in this account live. And we're going to start with $30,000, which to some people you'd say, that's a ton of money. Other people would say $30,000 is nothing. And I understand that. The reason we chose that value is number one, you can position size correctly at 30,000. I say you'd need at least $20,000 to start position sizing correctly, because there are going to be times, in fact, let's see what that looks like here, right? If you have, let's say $10,000, there will be times, let me just throw a whole bunch of stocks in here, like Apple, Amazon, Google, AMD, Nvidia, what was that?
J&J.
J&J, whatever, it doesn't matter.
Mm-hmm.
Throw whatever stocks you want in there. It's gonna like just say one contract. It's gonna say one contract. However, if you go up to 20,000, it's still gonna say one contract. You go to 30,000, it's still gonna say one contract. All right, maybe that wasn't the best example, but the greater you can get. Oh, that was 1 million. Let's go back down to 100,000. This will show you, this was the best example because these are all within just one of each other, a couple of each other. But the point is that when you don't have enough to position size correctly, you can be taking a stock that's huge. Let's do Coke and Tesla. There we go. This should work. Oh, Coke's in a downtrend. Damn it.
Deep Thought strikes again.
Yeah, Deep Thought strikes again. There we go. Mondelez. 27 Mondelez contracts versus 2 Tesla contracts at 100,000. Let's go back to 10,000. 2 and 1. That's a big difference. That's not position sizing correctly. Not position, because even though this is just one, that one will have outsized risk compared to this one. So if we go to 20,000, I feel like that's the ballpark where it starts to work better. If we go to 30,000, I'm feeling a lot more comfortable. So that's why we're starting there, is to get a realistic number. Somebody could actually show up and start trading with 30,000. Like I say, to some people it's huge, to some people it's small, right? One man's floor is another man's ceiling, right? So don't worry about that. I'm still going to show you everything, every bit of it, step by step by step by step, inside our trading room on a daily basis. So I think this is going to be really cool, man. I'm unbelievably excited about doing this with you, right? We're going to win the US Investing Championship next year. I'm not joking. This is going to happen. This is the Super Bowl of trading. We are walking into it together, and I'm going to hold your hand. We're going to take it the whole way. How's that sound, Joe?
That sounds amazing. Let's do it. And I'm really excited to see the actual trades online, because the options contract view can be very intimidating for people.
Yeah, it can be. I understand. And there was a good question. Will you be entering the trades live or early? So I'm going to be managing my account, my family fund account, and then the OVTLYR account. I'm going to put on my account and my family fund account before we go live. I'll send Joe the trades. And then as we are live, I will be doing everything live in the OVTLYR fund, which is the one that will be entered into the US Investing Championship, because I'm not going to withdraw anything from that one. That's the one that will be untouched. All we're going to do is grow it. And it's going to be huge. I'm very excited. Yes, trading the company fund live and the personal one before is exactly what I'm planning to do. So Joe, I got to tell you, I'm super stoked. This is everything we needed, and it came off the back of a couple losing streaks, right? Losing streaks suck, but losing streaks also are kicking the balls to be teachers. Yeah, like I mean, it really is a real thing. Even if you don't have balls, losing streaks can definitely help you out. So I'm not mad, and I'm excited to make some Masters of the Universe money. What about you, Joe?
I am very excited. These expectancy values are off the charts. The win rate's off the charts. It's just, I'm so looking forward to it. And especially, we have a very clear plan to have a look at and trying to modify into our own lifestyle and our own personal trading plan. And I mean, 5 exit signals compared to what we had it's amazing. Let's go.
A lot easier, a lot easier, and a lot more transparent, right? It's one thing for me to put in my stuff and my put on the trades in my accounts on the other screen on purpose, because I don't want to share all those details out there. But we're going to put this one right there live in front of everybody. It will be not possible to miss it, unless you just skip the videos. But what's going to be so cool, Joe, is we're going to have a record of how we won the US Investing Championship, top to bottom. Man, I'm excited about this. This is going to be great. The 137, 145 were parts of the OVTLYR 9. As I described earlier, they actually ended up being the OVTLYR 9 as the best options that we went with. Crazy.
So for folks that are watching the replay of this, how could they get access to future lives and be watching these trades as you're doing them?
Joe, that's a great question. You're probably asking yourself, what is OVTLYR and how does it work? You might be asking yourself that. It is a brilliant question to ask, a totally worthwhile question to ask. But old Uncle Warren used to say, Joe, that you need to be fearful when others are greedy and greedy when others are fearful. And I need to zoom this correctly. So what is OVTLYR and how does it work? Well, there we go. Old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. OVTLYR shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get the stock before the OVTLYR move happens. Now, if you're ready to save time, make money, and start winning with less risk, head over to it's just 3 easy. I'm stumbling all over myself. Thanks a lot, Joe. I appreciate you. It's just 3 easy steps. Head over to OVTLYR.com, grab the annual pass for just 82 cents a day. That's 64% off the regular monthly price. If you're on the monthly plan, just click that button right there and save 64%. Step 2, use the OVTLYR 9. I just spent an hour telling you how important it is to have every bit of the OVTLYR 9. We thought we could turn away from it, but we couldn't. We couldn't turn our backs on the 9. The 9 came and took us back. And then you sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. So there we go, Joe. That's how somebody would get started. And literally, it's 82 cents a day. You get the platform. You get to see all my trades. You get to have these type of sessions with me, a professional trader, and dude, this is going to be amazing. We're going to change people's lives, and it's going to be awesome. The diamond ticket trading strategy. I like that. Yeah, I wasn't set up for Joe. Joe handed me the layup, and I totally botched it. All right, Joe. If somebody was looking to save time, make money, and start winning with less risk, what's the first thing that they should do?
Well, they could click on one of these videos.
Oh, there's one there, and there's one on both sides.
Oh yeah.
Covering up our face at this point. So thanks, Joe. I appreciate you for being here. Thanks everybody else for being here, and we will definitely talk soon.